Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, February 8th, 5:08 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the beginning of November with the O'Neill follow-through days. You can see over here on the trend gauge our four green arrows, which we always look for. That means we really couldn't be much more bullish in the current state of the market leadership, bullish, and then all five of the major indexes across the three time frames that we track: the short-term 21-day moving average, the medium-term 50-day moving average, long-term 200-day moving average, all above except small caps. Well, actually, they're above too, but it's just their first close above the 21-day moving average. So minor improvement from yesterday as two closes back above the 50-day moving average for small caps. So that yellow sub arrow came off, and mid caps back above the 21-day for multiple closes, and small caps first close back above. So some improvement there. Mid and small caps outperforming today, while the indexes trade in a very tight range and big leadership takes a break. That's kind of the theme of today, is what just happened. Mid and small caps lead, along with leadership stocks putting in some very nice days today. Very nice reaction today. Big-7 rest. S&P 500 poked its head above 5,000 for about 20 seconds, closed just shy of it again. So second day with the high of the day, right around 5K. Here are the final numbers. Big-7 down an average of 0.2%. And as I said, taking a break. RG8 is what we want to see, up 1.38% today. S&P 500 just barely positive, opened down 0.5%, traded in a very tight range all day, about 0.25% wide, tightest range I recall seeing in a while. That just means the market is coiling for a move in one direction or another. Equal weight up 0.22%, NASDAQ 100 up 0.2%, equal weight about double that. Dow up 0.13, mid caps up 0.9. Russell 2000 small caps up 1.5, Global 60/40 down 0.11 as bond prices came off a bit while yields slightly higher. In-house GROTECTION up 0.49%. Let's get into the charts, and we'll start with the S&P 500 on a daily. As you can see here, second day in a row closing within 5 points of that 5,000 level. Yesterday within 0.11 of touching that. Today we got 0.40 above it before coming back below it, but continuing to trend nicely higher. Love the slopes of the lines of the 21 and the 50-day moving average. And the 8 as well. 6 closed back above the 8-day exponential moving average after poking its head below on Wednesday 131. That was on the FOMC press conference, which initially was seen as hawkish, but market has reacted positively since then. Let's go on to the NASDAQ 100. Despite the Big-7 resting, it was up today by 0.2%, making a higher closing high. Continuing to show relative strength this week. Dow Jones Industrial Average also making an all-time high close above 38.7. Now, here's where we were weak, but we saw some improvement today. Here's mid-caps back to the top of this 2+ week range after undercutting the 21 earlier this week, but two closes back above it now. A little bit of relative strength. You can see the line just for today, at least, hooking up. And small caps, IWM underperformed yesterday, outperformed today, regaining with authority the 21 and the 50-day moving average. Just first close above the flat sloped 21-day moving average. So pullback, if we pull back, we want to see that hold and then a bounce off that and take a shot or take a run toward that 200 level. And that would certainly improve the breadth numbers, which everybody's talking about the breadth. We've got very clear leadership. The problem is it's mostly focused on AI, data center, and networking type names. So there's money to be made in there, along with select retail and healthcare. But we really do need to see leadership broaden out. How about the VIX today? Down, making a lower low, tight range trading along with the index down 0.31%. Dollar up slightly higher today, but closed in the bottom third of the range. How did this impact gold and gold and silver stocks? Gold, tight range, just down 0.1%. Gold stocks, GDX, still look terrible, down 0.6% today. Bitcoin, we bought IBIT yesterday. I continue to show the BITO chart just for context of exactly where this has been trading. It really does trade in sync with all these new Bitcoin ETFs, give or take 0.1% each day, but you can see the gap up and up 3% on the day. So we're positive right away on our first buy. One of the things we say in house all the time: the best trades work right away. So we're off to a good start with this one. Let's go over to bonds now. Broad bond index lower by 0.25%. That means yields on the whole or higher. Here's TLT, the long bond, down 0.58%. Now to the yield, 0TYX up 1.53%. I would start to get concerned if these yields break above the highs from a couple of weeks ago. 0TNX, the 10-year, same situation, and we're getting close to it, 41.98. Everybody's looking for a catalyst for the markets to go lower. Interest rates are supposed to be going lower per the Fed, but again, all they control is the short-term rates via the Fed funds rate. So keep an eye on this 42 level, which is approximately 4.2% on the yield. Let's get to the tail of the tape here. You can pause this. Another bond auction. These were two hurdles that we wanted to get over this week, and they both were graded very well yesterday. The biggest auction of all time in 10-year bonds, and today 25 billion in 30-year bonds also went well. Now tomorrow morning, CPI revisions are going to be released, and this has the potential to roil the markets a little bit because the thought is that inflation is under control based on recent CPI reporting. And anything to the contrary of that is probably not going to be taken in stride by the market. So we'll keep an eye on that. Up 5 of the last 6 days, 6 days above the 8-day exponential moving average, 24th above the 21-day moving average. Really just not moving today as the market's coiling for some sort of a catalyst. I mean, really, with the S&P at 5,000 and earnings estimates about $250 for the S&P, that's a richly valued market by historical standards. Some sectors undervalued, some overvalued, but the overvalued sectors have outstanding growth. So ultimately, earnings have been, for the most part, received pretty well. Of course, the occasional blowups here and there, but what are we going to see to drag us above 5,000, as it seems to be, at least for 2 days, putting a lid on things? But leadership continues to act well, and that's what we're really most concerned about. So sectors today: KRE, financials and utilities to the downside, along with uranium, as CCJ earnings weren't taken. The reaction was negative to them. On the upside, oils, retail, semiconductors, software, and Bitcoin. In-house, we bought ARK-K today. We'll take a look at that chart in a minute, and did some offensive trimming on Palantir. I mean, 20% in 3 days. You got to take some of that off. So we've got a very small remaining size. Keep it on for potential adds on pullbacks to reasonable levels, but right now 20% up in 3 days. We'll look at that chart as well. So adjusted beta from 1.28 up slightly to 1.33. Bottom line on the day: Big-7 rest while mid, small, and leading stocks very green. S&P touched 5,000 again. See what the CPI revisions say tomorrow, and earnings continuing to pile in. All right, let's go with what we bought today. ARKK. All 8 of the RG8 tickers look good. The worst one was ARK-K, but we were watching this downtrend line here, which happened to correspond to the 21-day moving average. We poked our head above it yesterday and emphatically got above it today. So we took a starter position 3% in ARK-K. If small and mid caps are going to come back in vogue, this is going to act well. And then Palantir, you don't often see a 3-day move up like this. We took some off at 24.95, sold half of the position. This will pull back and get closer to the moving averages, and we can look to re-enter. It is very clearly, look at the volume in these last 3 days, very clearly taking a bit of a leadership role based on that reaction. So we'll see what happens if it consolidates for a bit. What else we want to look at today? What else treated us well? NXT, which we added to yesterday, we're initially underwater. This had a good day today, up 3.1%. Uber, after earnings, continues to act well, up 1.4%, although closing at the bottom of the range. CrowdStrike, another higher high, up 1.7%. And Lilly, which we trimmed 3/4 of, but it's that 740 levels acting as resistance on there. But good good action the last 2 days after gapping up initially on earnings and then closing red for the day. Today, the big story was ARM. And up 48% on their earnings report. You don't see that very often, but they were up to $114, and it was about 114 times that they mentioned AI on their conference call. So certainly looking to be a beneficiary of the data center. They design chips, and their designs are licensed by other chip companies. So you need the chips, you need their designs, and then of course you've got the manufacturers, which all had good chip manufacturers, which all had good days today as well. After hours, a blow up. A firm had a big day today, running into its earnings report, but it's down 12% after hours. A winner after hours is Net. People piled into this beforehand, up 8% today and up another 20% after hours, as Net is going to have a big gap up tomorrow. Also on the downside, Pinterest, which was set up pretty well, but it's down 7.7% after hours today. And another one that was set up well, Expedia, in fact broke out today, but it's down 14% after hours. So that's earnings and the portfolio. And with that, we'll wrap it up. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Our flagship portfolio is named GROTECTION because it serves a dual purpose, growing assets in uptrends, protecting them during downtrends. Common sense approach to me, although a lot of Wall Street people say that you can't time the market. Well, don't get in the way of saying you can't do something. Don't get in the way of the people that are actually doing it. And with that, we'll wrap up the video for Thursday, February 8th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.